there's negative interest rates, and there's quantitative easing, and there's bailouts and bail-ins, and there's currency controls, and there's exchange rate games that are played by the banks and the intermediate banks. You get none of that with Bitcoin. With gold, if the price really runs up, like if the price went from $1,200 to $10,000 and it kind of stayed there, that's going to bring a lot of gold mines online that aren't viable or economic at $1,200, but they might be at 2,000, 3,000, 5,000, etc. With Bitcoin, the price could run huge, and you're still not going to really increase that supply of Bitcoin. So Bitcoin's supply is even more inelastic.
It's been 115 years since investors had an opportunity like this. The energy of the future. Now Elon Musk and Frank Giustra are betting big on the rise of this energy source that will change the world. We're talking about the oil of the 21st century. Learn more at crushthestreet.com/charge.
Hello, everyone, and welcome into crushthestreet.com. We got a returning guest today. This is one of the people who was talking about Bitcoin and started recommending it around 25 cents, and it's been history from there. It's been over $1,000 a coin, and right now it's sitting at around $415 as we speak. His name is Trace Mayer, and he's funded core blockchain infrastructures, including Armory. He has the Armory, which provides the foundational security for Bitcoin wallets, BitPay, which is the largest Bitcoin merchant processor, and Kraken, the largest Bitcoin Euro exchange and major worldwide liquidity provider, and he hosts the extremely popular Bitcoin Knowledge podcast. Trace Mayer, thanks so much for joining me today.
Oh yeah, glad to be here, and glad to be back.
Hey man, since we've last talked, Bitcoin has been in the trading range here of around $415, and I got to tell you, when even an investment like gold is in a trading range, it's not hitting new highs or crashing down to new lows, the excitement around it kind of tends to die off. I mean, people buy when it's crashing and buy when it's hitting new highs, but right now we're not really seeing that. So I wanted to get you on and discuss some of the latest news regarding Bitcoin. So if you wouldn't mind, go ahead and just your initial thoughts on what we're seeing right now in Bitcoin.
Yeah, I guess we're all a little bit like ferrets on meth, right? We just want to keep hitting the refresh button, seeing that price going up. It is good to keep in mind that about 12 months ago it was around $200. So we've seen it double in price just in the last 12 months.
And that's substantial, very substantial.
Yeah, so I mean, when we say it's in a trading range, like I guess, when you're going from a quarter to $1,000 in a 5-year period, you get a little used to big differences. But yeah, I think that, we're seeing a lot of just the fundamentals of Bitcoin are just really taking root. BitPay, our merchant processor, they had a really big announcement yesterday. They've integrated with PEY, which is a big German payment processor, and they're expanding payments out in Bitcoin. So they help merchants take payments in Bitcoin, but now they're helping payroll services, they're helping people make payments out in Bitcoin, which opens up businesses in a big way. And just to put it in perspective, they process, about $1 million a day of payments, but they're processing about $40,000 a day in payroll type services just for one of the companies out there. I don't know all the metrics on the payroll services division, but this is starting to create this kind of closed loop economy where people don't have to rely on banks, they don't have to rely on credit cards, they don't have to rely on even cash, they don't have to rely on any of this legacy infrastructure that has so many problems attached to it. And so that's very exciting.
Trace, as you talk about these infrastructure build-outs, that makes Bitcoin more viable. And I would suppose it creates a floor in some of the price targets. So I'm wondering, if you've looked at some of those aspects where, this has happened at such and such price, and Bitcoin has increased its viability at such and such price. And I'm wondering if you feel like there's some pretty strong floors in the Bitcoin price, and where are those?
Yeah, we definitely see this. I first started talking about it around a quarter, and then it ran to like $30, and then it eventually crashed to $2. I mean, that's pretty painful time. But out of that initial run up to $30 and all the new customers that brought in, the new users of it, we funded a couple companies. We funded BitPay, we funded Coinbase as VCs. Out of the $2 million of VC investment that year, me and a friend, we were about $500,000 of that. So we funded 25% of the ecosystem. The following year, there was $85 million of VC investment, and we got a bunch of new companies. And there's been about $1.6 billion of VC-funded deals into Bitcoin-related projects. And we see this happen in these waves. And each wave gives all of the infrastructure companies the opportunity to use and to get familiar with and to build the technological understanding of Bitcoin, to build out the tools that make it more useful. More people come in, and what we're seeing is that the average number of transactions every day keeps growing. The amount of transaction fees that are paid keeps growing. Back in about 3 years ago, I'd say average transaction fees per day were about $200, $300, and now they're around $20,000 per day. And I really like that metric because it shows how much people are willing to pay to use Bitcoin.
Wow.
When we had the .com boom and bust, a lot of valuations were page views or email signups or blah, blah, blah. And investors got their eyes off of the ball when it came to how much are being generated in terms of profits. Like how much money is actually being made from all of this stuff. And we had a huge overbuild out, huge crash. But we had a lot of companies that came out of that. We had Google and Facebook and Amazon. And so likewise, we're seeing the same type of stuff happen with Bitcoin. But it's, this fundamental metric in terms of how much people are actually paying to use Bitcoin, and that's reflected in the transaction fees. I think that helps show how much utility people find from the network. And that metric is up 100x just in the last 3-4 years. And that's a big deal because the price isn't up 100x.
Right. No, exactly. And looking back when Bitcoin was over $1,000, I'm sure it was not being used nearly as much. And just like you said, I'm reiterating it. So it didn't support a price that was that high. But so is it fair to say, looking at Bitcoin at around $415, you're very comfortable at that price?
Oh yeah, I'm actually very comfortable. I think that the ecosystem as a whole is doing wonderful. Kraken, our volumes that are at all-time highs. And we've actually become the largest Bitcoin exchange in the world, not just in the euro, but in the world in terms of fiat volumes and stuff.
Wow.
And also looking back at that $1,000 price point, there was a lot of hype, there was a lot of blue sky built into that price, and before that happened, if you looked at the number of Google searches, if you just looked at the overall size of the ecosystem, the community, everything, at the height of that bubble, all of those metrics, all of those KPIs, those are now the averages over the last about 6 months.
Wow.
And so our base at $400 is huge.
Wow.
And so then, I don't know exactly what's going to be the trigger that, kicks off the next run on the price. But I do think that we're kind of down here near a floor, and it goes into how demand for Bitcoin actually works. We've got speculation demand, and then we've got transactional demand. And I would say that speculation demand, for the most part, it's very muted right now, whereas the transactional demand, is at all-time highs. You know, I've given you transaction fees in dollars, number of average daily transactions, metrics from BitPay and Kraken. And all of this is, you know, the fundamental demand. People who are using it to make payments, they're using it for payroll purposes, they're using it for remittances, all this stuff. And the price elasticity of demand for that transactional demand component, the price of Bitcoin is actually irrelevant. Whether it's 5 cents, $400, or $50,000, it doesn't matter. Because it performs the utility equally well, because you're using it as the protocol to just transfer value over a communications channel. Because you can't email gold, even dollars have to be sent over over a protocol, and we hack systems together to do wire transfers and all this stuff, and it's just so inefficient. And now there's negative interest rates, and there's quantitative easing, and there's bailouts and bail-ins, and there's currency controls, and there's exchange rate games that are played by the banks and the intermediate banks. You get none of that with Bitcoin. If you're an importer in Brazil and you're importing electronics from China, guess what? You have to wait 45 days to send a wire out of Brazil, and every single wire has to be approved by the Brazilian central bank, and you have to pay all the currency controls. And if you're the Chinese that's receiving it, you have to get those reals converted into dollars, and someone takes a cut. And then you have to get them converted into yuans, and someone takes a cut. And then you're stuck in the Chinese banking system, which is, you know, as bad or worse than the Brazilian banking system.
Yeah.
So you don't want to be in either of them. And you don't want to be in yuans, you don't want to be in reals, and then you can't exchange back out of your yuans into dollars. And so guess what? Importers and exporters from China and Brazil, or China and Venezuela, or China and Argentina, they're starting to use Bitcoin as the rails to send their money around.
Yeah, you know what? I have a friend / family member that was in Argentina. They were dealing with the bank controls on their money. They couldn't move their money out of the country. And I'm like, man, you should. I mean, this was when Bitcoin was around $100. And I wasn't even thinking about price appreciation. And man, if they would have just, you know, did it just and forgot about it, they would be up 3 times on their money. Instead, you know, the Argentinian peso has lost significant value since then, and the Bitcoin price has taken off substantially. But wow, what inefficiencies though that we deal with in the confinements of the current system. We're in the system. We're controlled by the system with what we have, and of course, that's what they want.
Well, exactly. I mean, I had a friend, they decided they were going to move down to Argentina for 6 months, and they didn't know anything about Bitcoin. And I was like, you know what? The easiest way for you to get your cash for, you know, buying your steak and just all your daily expenses is Bitcoin. And so what they started doing is they went to Circle, they'd buy the Bitcoin, they'd meet their friend down in Argentina at the coffee shop, and they would trade the Bitcoin for Argentine pesos. And then they didn't have to deal with a wire transfer. They didn't have to deal with the different blue rate exchange rate versus the official exchange rate, you know, and it was just the easiest, the simplest, the smoothest way to convert their US dollars into Argentine pesos that they could spend.
That's
and,
so true.
And that's an actual use case. And they're not speculating on the price of Bitcoin. They're just using it for the utility.
Yeah. You're absolutely right. Trace, I want to move over onto this block size issue. Can you describe the resolution miners agreed upon to implement in April to fix the block size issue?
Well, one, there's not really a block size issue at all. I mean, it's, we have to have a decentralized, censorship resistant base. That's the core of Bitcoin that we can then build everything on top of. And so there's not really an issue at all. We have a couple of extremely loud people that are trying to make it into an issue, but for the most part, it's not an issue at all. The Bitcoin network's just chugging along just fine. And big scaling solutions like the Lightning Network are being worked on that will enable Bitcoin to have trillions and trillions and trillions of transactions. And so, you know, it's not really an issue at all. We just have a bunch of loud people that, ironically, are not very committed to Bitcoin. One of them, Mike Hearn, for example, he he threw a little temper tantrum. Bram Cohen, who invented BitTorrent, he said that he wrote an article called Whiny Rage Quitting, and it was about how Mike Hearn threw this temper tantrum and then sold all his Bitcoins in advance of everybody else, by the way. So he effectively front run the market. So he sold all his Bitcoins, then he wrote this Whiny Rage Quitting article, and then he stomped off to work for the big banks. So, I mean, we've got people that are second-rate programmers. They're actually the bench warmers on the junior varsity high school team. They're just not good enough to do Bitcoin programming because it's gotten very technical, it's gotten very complicated, and since they don't get their way, or they don't get the way of the people who are paying them, then they stomp off with whiny rage quitting and they go work for the banks. And so there's actually there's really no issue. The real players, the people who have built Bitcoin and built the code and have the expertise, and I mean, we're talking about like Dr. Vladimir Vanderlaan, Dr. Peter Wulla, Dr. Adam Back. These are all like PhDs in computer science or cryptography. They're very much in favor of the status quo and what we're doing, and so that's pretty much what's happened. Is these second string junior varsity high school players can't compete on the basketball court with, LeBron James and Scottie Pippen, and so they stir up a bunch of dust. They take their argument to the crowd, who was like, oh, well, they were good basketball players 5 years ago. Well, 5 years ago, we didn't have the talent in Bitcoin that we have today. It's just gotten much more competitive. And if you've been extremely relevant and now you're no longer relevant at all, and you start whiny rage quitting, it just makes you look stupid. I mean, look at Mitt Romney whiny rage quitting, right now in the elections. And so it's like, that's really what's happened. The vast bulk of the Bitcoin developers are very comfortable with the roadmap going forward, and they're busy writing code instead of whiny rage quitting. Sure. And I think that that's helping resolve some of this uncertainty, because at the end of the day, people vote on what Bitcoin is by the code that they run on their own individual computer. And these whiny rage quitters, people basically voted no confidence in them. They wouldn't run their code, and so they're stomping off into the sunset. And I say good riddance. They weren't very good to begin with. They haven't been very helpful at all. And so, they can just go do something else. They can go work for the big banks, like Mike Hearn has done.
Wow. Trace, so could you do me a favor and just describe what the resolution is that the miners agreed upon to implement in April?
Well, I mean, we've got things like segregated witness, which will move some of the validation out of the block size, so that way we'll use the block size more efficiently. And other than that, I wouldn't say that we've got any firm, hard commitments on anything like increasing the block size or hard forking or anything like that. And really, we don't need to, because we can implement most everything that we need to implement as soft forks. For example, confidential transactions, which is going to encrypt the blockchain, which will be a huge use case, a huge utility adder for Bitcoin. We can probably implement that now as a soft fork with what's being done with segregated witness. So it's very exciting, because then we don't have to change Bitcoin at all. It can cement into a protocol, and then we can build and extensify around it.
So you talked about a lot of people making a big deal about this, being very loud, but the issue not being much of an issue at all. So is it fair to say that you're not expecting a price rally to result after the resolution? I don't think that the speculative demand for Bitcoin has really, it's still fairly muted. I think what could be a catalyst will be the changing of the block reward, which will happen sometime around July. And that's because if you look at Bitcoin, like the stock to flow, the saleable Bitcoin, that's going to get drastically shrunk in July, because every 10 minutes the network currently issues 25 Bitcoins to the miners, and that's going to go to 12 and a half.
And so, when people have to get Bitcoin for their transactional demand, they'll pay whatever price to do that. The speculative demand, there's just not going to be as much speculative supply. And so I think that's when we could really see some dynamics changing in terms of the supply and demand of Bitcoin. Otherwise, the speculative demand, I think that largely people are chasing a couple other rabbits. The Ethereum project is a good example. On Kraken, we were the first exchange to support Ethereum, and Ethereum's gone from, I think, like 60 cents to $12 in the last couple months. And so, I think that's where a lot of the rabbit chasing has been taking place lately. But I think that price is going to have to correct because there's a lot of blue sky built into that price. And it will correct by people moving out of Ethereum and into Bitcoin.
Trey, so, again, for a guy like me who's, very, very uneducated on Bitcoin, the block reward halving, I mean, is this equivalent to, let's say the mining production of gold getting cut in half in a year that's being supplied to the market? So can we expect the supply of Bitcoin, the total that comes onto the market each year to get cut in half?
Yeah, well, so there will be 21 million Bitcoins total. There currently are about 15.4 million Bitcoins that are available out there. A lot of them have been lost. And that means that, we've got a good 60% of the Bitcoins have already been produced. And what'll happen is, it doesn't matter what the Bitcoin price is. There will only be 12 and a half every 10 minutes instead of 25. And you look at that compared to gold, it would be like going from 2,500 tons per year to 1,250 tons per year. The supply just shrinks. And the thing is like with gold, if the price really runs up, like if the price went from $1,200 to $10,000 and it kind of stayed there, that's going to bring a lot of gold mines online that aren't viable or economic at $1,200, but they might be at 2,000, 3,000, 5,000, etc. With Bitcoin, the price could run huge and you're still not going to really increase that supply of Bitcoin. So Bitcoin's supply is even more inelastic, right? Because you have to go and get Bitcoins from people who already have them.
Right. Wow, yeah, it's a great analogy there between, what is happening with gold and what is happening with Bitcoin. So I guess my question is, with gold, we know there's a lot of manipulation that goes on. I mean, if you follow a guy like TF Metals, report.com, he'll go through the daily manipulation of the naked shorting that goes on by the bullion banks. Is there any risk of this happening and the major banks and the powers that be attacking Bitcoin and suppressing price?
That's an excellent question. I'm actually a consultant to GATA, and I follow their work for years. I think that it's going to be really, really tough to do because Bitcoin is built from the ground up to be censorship resistant. And what we're talking about with the gold price suppression scheme and all this stuff, we're talking about financial repression or economic censorship. And Bitcoin is built from the ground up to be economically censorship resistant. You can take physical delivery of your Bitcoins way easier than you can take physical delivery of your gold. And by that, I mean you can demand the transaction to happen in the blockchain. And once, there's no faking it. You can instantly verify the quantity and the quality of your Bitcoins. You don't have to get them reassayed or anything like this. So the barrier to enforce the economic consensus and the economic reality is way lower with Bitcoin than it is with gold. And, Kraken is a great example. Because we're the largest Bitcoin exchange. And guess what? If one of our customers wants to withdraw, $3 million worth of Bitcoin, and assuming their account's been AML and KYC compliant and they've got the limits up there, and they can, and they're in compliance with law, we're able to make that transaction, then they make the withdrawal request and we send it, and boom, it hits the blockchain like 2 seconds later. And that, I mean, imagine trying to get the physical gold from, these bullion banks. They're going to play every trick in the book to not give you $100 million of physical bullion. And so, I think it's very interesting because there's probably more physical cash traded for Bitcoin than there is the fiat currencies on the exchanges. It's actually kind of annoying because Kraken, we play by the rules so we don't go to jail. But our competitors who run Bitcoin ATMs or trade Bitcoin for physical cash, they make higher margins and more profit, and they don't have to be in compliance with the law because they're just trading Bitcoins for cash all over the world. And I mean, it's a massive, massive market. We're talking tens and tens of millions of dollars every day of Bitcoin for physical cash. And that's economically censorship resistant because when you're trading the physical cash, that's irrevocable, right? Once you get the cash to the person, you can't really get it back.
Right.
And the Bitcoins are also irrevocable. And so those transactions are both irrevocable. So when they happen, I mean, it's definitely quid pro quo. You're trading this for that. And so it's very exciting because that adds a dynamic of economic censorship resistance to Bitcoin. Because if you're going to manipulate the price down, you actually have to deliver the Bitcoins because people are going to buy it, right? And they're going to demand delivery of it. And that's exactly what we're seeing. And when an exchange is not able to meet delivery, it's gone. Mt. Gox, gone. There's been hundreds of Bitcoin exchanges that are gone because they haven't been able to deliver the Bitcoins. And that's very exciting. I mean, meanwhile, they're changing the rules on the COMEX, and I even know some attorneys that work down with the SEC in the CFTC in DC, and they're changing all the rules on how and massaging the rules on how the derivatives will play out when there's a failure to deliver on one of the major exchanges like COMEX or something. Wow. I mean, it's just totally, totally shady, like the current monetary and financial system. Wow. And I think that's why we're seeing even General Re, the second largest reinsurance company in the world. I mean, we're talking massive amounts of capital. They're now taking physical delivery of euros because of the negative interest rates and the problems with the European banks. And hey, guess what? Bitcoin, like gold, is nobody's liability. And that means it does pose a threat to the paper fiat franchises of the central banks. And as I was talking about with BitPay, there are a lot of companies now that can run Bitcoin only. All their revenues, all their expenses are in Bitcoin. Why do they need the legacy, broken, imploding current financial system and monetary system? They don't.
Wow. Trace, you touched on something there, and I'm always wondering what the central banks will do to continue to hold everything together, to take it to the next level, because manipulation can only go so far until the free market overwhelms it. Now, what they obviously can do is continue to contain it and, their next level of containment. And so you're talking about them changing the rules on the COMEX. I mean, I don't know if you care to expand on that any, or your thoughts on it.
Well, I mean, it's more kind of the rules with how you settle and net out the derivatives, right?
Right.
And so, I mean, force majeure is kind of one of those terms that's kind of bandied about. I mean, not specifically applicable in this case because usually force majeure would apply with something like war. But maybe you use Belgium as a state of war so that you can cash settle the gold derivatives so that you don't have to deliver the physical gold, because that's the problem we've got. The central banks, they carry gold in the vault and gold out on loan is the same line item on their balance sheets. In effect, they're reporting cash and accounts receivable are the same thing. But anybody who's ever run a business knows that cash and accounts receivable isn't the same thing. Like last time I checked, gas stations and your attorneys don't take receivables. Mm-hmm. And so and even 10 years ago, the Western central banks only have maybe a half to a third of the physical gold they say they have. And so and it's very strange behavior. If you own a lot of something, why run a cartel to keep its price down? Well, it's because the power to issue and control what we use as currency is infinitely more valuable than the price of a portfolio asset. And so it's maintaining their paper fiat franchises that's the real goal, because then they can just print, $200 million or $200 billion or whatever they want to do, just control P, right? And on the computer, and then you just have more digits of this illusory, dollar coin or Draghi coin or Yellen coin or whatever we want to call it, that's really just a pre-mined scam, because it's not limited in amount. They can just change the rules of how many are out there. And it's very, it's very disconcerting, because all of this goes in and warps and manipulates and changes the whole structure of the economy. And that can end up posing major threats, because when you start interfering with our ability to perform economic calculation, then how do we allocate capital? How do we determine what crops need to be planted, if any? Because that's another thing. Like monkeys, they have to have the banana. They can't have a receivable or an IOU for a banana. They'll die, yep. Right? And so, and we, humans we're like monkeys. We have to actually eat the hamburger. We can't eat an IOU of a hamburger. And so this is a big, big problem. That's why, I think a lot of people, one of my best investments was buying, 50 to 100 pounds of popcorn just as storage. One, I have the storage of extra food if I need it, but two, it's up like 200-300%. And so, it's like food storage is actually one of the best investments that somebody can make, which is a form of insurance or a hedge against this destruction that the central banks are raining down on everybody, trying to maintain their role as the elite or the establishment to set all the prices in the economy. Because we don't have markets anymore. We just have interventions. And the interventions are happening in the interest rates. And now, Larry Summers and even in Europe, they're talking about trying to ban cash. And they're trying, why? Because cash is one of the ways that people can avoid the economic censorship. And they need to be able to ban cash so they can introduce the negative interest rates onto your digits that are held with a bank or a central bank. And so it's really, really crazy, and it poses a threat to humanity, because we can't perform economic calculation. And the only reason our societies work and function the way they do with all their complexity is because of the freedom that we've had over the last 200, 300 years. And so if we lose that freedom, I'm not sure that the economies that will be left will be able to support the large numbers of population that we have, because we won't be able to perform the economic calculation to allocate the resources in order to do that.
Trace, what a profound but simple point you made when you said, if you own a lot of something, talking about the central banks, why would you suppress the price down? And I mean, obviously, we know this, but you pointed that out, and it really hit me hard, and that the way central banks and the actions that they're taking, why would they want that to be down when they own so much of it? And of course, the answer is that they don't. And what they own is the fiat paper. That's what they control, and that's what they benefit from. So, Trace, in conclusion here, do you have any closing thoughts and just kind of your general advice for people here in 2016?
Well, I think it's very important. The Russians have a saying, like, the price of sausage is 1 ruble per link, but there is no sausage. And that's what happens when you try to set prices. Price controls lead to shortages. Shortages are used as an excuse to implement rationing. And what the central banks are doing with negative interest rates, with currency controls, with all of this AML, KYC stuff, with the war on cash, they're trying to implement price controls, is what they're trying to do. And price controls lead to shortages. And so, we take for granted that that we have food in the supermarket shelves. But look at Venezuela, look at Argentina, we know what happens when price controls are attempted. And so, I'd recommend people, while you can, have a reasonable amount of insurance against this insanity. Have a couple extra cans of food in the pantry. That's one thing that someone can do. The other is try to immunize or inoculate yourself or otherwise defend yourself by being relatively immune to the craziness that they do. Bitcoin is a great way to do that. It's like a force field around yourself that makes you immune to violence, because no amount of violence is going to solve the math problem to get past that force field and take your wealth, which is stored in Bitcoin or whatever it is. Bitcoin, or we're actually able to do contracts for difference in Bitcoin. So you can have Bitcoin, but it's pegged to the price of Apple shares or gold or whatever you want. So moving yourself out of their system, out of their control, because you're either going to be, not all the cows are going to make it across the river. Not all the wildebeest are going to make it across the river. The crocodiles are going to get some of them. And so, evolve or die. Grow some wings, fly over the river, don't get eaten by the crocodile. And then you don't have to really care so much about what's going on, because it's a problem that has no practical solution. All the capital has already been misallocated. There will be a crack-up boom. We're in the middle of it. It's going to destroy massive amounts of wealth. It's a terrible time for capital because nowhere's really safe. That's why all the markets are correlated together. And so, everybody has to really invest in themselves, and that means you have to get technologically literate. You have to learn how to use these new tools to defend yourself against the craziness of the establishment. And you can't trust any of the establishment media. You can't trust any of the establishment itself. Even when you have massive, massive voting by the people, like with Trump or with Sanders, they're still going to steal the votes. They're still going to steal the delegates. They're still going to steamroll the people, and they're going to do it to maintain their power and their ability to steal and take everybody's retirements and everybody's money. And so you can't trust any of them. You can't trust any of them at all. And they're the most vilest people in the world, these bureaucrats and these politicians. And they're posing a systemic threat. It's not, the libertarians didn't gas anybody. They didn't drop nuclear bombs on anybody. And yet everybody seems to have trust in the statists. There's a lot of things that the statists have done that the libertarians haven't done. And now the statists are doing things on such a grand scale that the nightmares that they're going to work out are going to look like child's play.
Wow.
I mean, we're in the next fourth turning. The Constitutional Revolution, 25,000 people died. Civil War, 750,000 people died. World War II, 85 million people died. Now we have nuclear weapons. I mean, look at the trend of what these statists do.
Wow.
Last century they killed hundreds of millions of their own people. And that's it. We have the anatomy of the state, and the state is not us. We the people are not the state. They are the state. They use the implements of violence and power to steal from us and to conscript our resources into their system. But they're failing.
Yeah.
They're failing just like the Soviet Politburo failed. They tried to set the price of sausage, and there's no sausage. They're trying to set the price of gold, and guess what? They're having a really hard time coming up with the physical gold to deliver. And same with so many of the other commodities. And, if it comes to food, it's going to be really, really crazy, because it was shortages of food that brought the prices up that started the whole Arab Spring and all of those massive protests and civil unrest. And so that's just what I'd kind of say. 2016, we've been off to a fun, exciting start, and it's going to be one heck of a year. And so just make yourself, get yourself in preparation. Preparation meets opportunity. That's luck. Don't have bad luck, have good luck, because you're prepared for the opportunities that present themselves, and you're not at the mercy of these crazy lunatics that are the bureaucrats and the elites that are just totally disregarding the will of the people, and not just in the U.S. elections, but across the world. It's really, really a dangerous time that we live in, because of these nutcases that are all talk, no action, thieves that are running the state, strutting around in their costumes and displacing millions and millions of people. We've just had Russia and the U.S. have barely bumped shoulders, and it displaced 7 million people in Syria.
It sure did.
You know, I mean, they just bumped shoulders. Imagine if we actually had real war. We could see 1 billion people die. You know, 85 million died in World War II. Now we've got our weapons now are way more effective at killing everybody. And President Putin, he actually gave a major address, and he said even the deterrent of the threat of nuclear force is no longer holding much weight. You know, these crazy neocons in the U.S. are hurtling the world towards war, and they're doing it over the objection of massive amounts of people that are coming out to vote for Trump. Because Trump has a completely different foreign policy than the neocons. And, you know, it's a scary thing, because these neocons, they don't care about us. They don't care about the people. We're just pawns. We're just cows to be turned into hamburger to satisfy their bloodlust, because that's what they care about. They care about bloodlust. I mean, Obama's killed 1 million people already. Yeah. You know, that's what they like to do. That's what drives them. And so, you know, try not to be a victim of these nutcases.
Trace, I was trying not to stop you because I was sitting here in enjoyment. You are a leader, you're passionate, and wow, you know, I'm so glad I was able to talk to you today and to get this information out, because, again, you know, not enough people are thinking along these lines, and it takes education to kind of break through the mainstream narrative. So, again, Trace Mayer, everyone. Trace, if people would like to reach out to you or learn more about you, where would they go and what would they find?
Yeah, I think the easiest place is just www.bitcoin.kn, and that's for the Bitcoin Knowledge Podcast. I interview all the CEOs in Bitcoin, so, you know, that's probably the easiest place for people to start.
Awesome. Well, thanks again, Trace. I really do appreciate it.
Yeah, thanks for having me.